Hello guys, here's your boy Yuri from Gold Sniper Signals, and today we're going to discuss which important key points you have to follow so that your risk management is on point and you stay profitable. By the way, what you see on my screen right now, this is a lot size calculator for Forex, where you can literally choose your asset, the currency, and then you can calculate your lot size. If you want to check out this website, I put a link down under this video where you can check it out and calculate your lot size. But for now, we're going to jump to our list and discuss it. So first of all, how much should I risk? Basically, for a funded account, you should risk 0.5 to 1% per trade. That's absolutely enough. Because as a funded, when you are a funded trader, you have to follow some strict rules. Also, I would say stupid rules, so you don't over risk it and lose your account. So that's why it's 0.5 to 1% enough. For private accounts, it's a different story, because herefore you can risk 1 to 3%, because you don't have so much money, but you have to risk more to make more money. That's absolutely okay. You can also risk a little bit more than 3%, but then it's a little bit risky. But when you hit some big bangers, then you can increase your account very well and flip it to a bigger amount. Okay, next point. How many trades a day? Generally, 2 trades per session is enough. More trades doesn't mean more wins. Most important rule is to protect your capital. Avoid big losses. Always try to keep losses small or at break even. Also, don't be greedy. Take some partial profits on the way to your profit target. For example, I will explain when you have a trade, when you place a trade for gold and you have 3 take profits and you hit TP1, that's really good, let's say for 30 pips, then you hit TP2, then you should be already taking some profits out, because you don't know if this trade going to play out to hit TP3. That's why you should take some partial profits here already. Also at TP1 you should take some profits. So you never know what the market is doing, because anytime the price could reverse and hit your stop loss. Then the next point what we're going to discuss is, should I mix my trading strategy? No, trade only one strategy per account. That also counts for signals. When you use one signal provider, just put one signal provider per account. Don't mix these different strategies on one account. Trading from Monday to Friday, good? Yes and no. My rule of thumb is, if you have 3 profitable days, stop trading for the week. More trades doesn't mean more profit. Over trading can decrease your profits and lead you to bad habits, placing too much trades. That's why don't overtrade. When you have 2 big banger days, 3 big banger days, stop. You're already in profit. When you're trading on Friday or on Monday additional, then you can potentially lose all your profits. That's why be happy with your profits and wait until next week. Trade at news. No, never trade at news. Close your trades when important news are coming, like CPMI, FOMC, etc. 30 to 60 minutes after the news release, it is absolutely possible to trade, because the markets are cooling down and you can see in which direction are the assets flowing. So there you can possibly trade. Which time should I trade? I recommend to trade at London session or at New York session. The most trading pairs are active in these time zones. So next point, stop loss important or waste of time? Always use a stop loss. You never know what the market is doing next. Trail your stop loss and put stop loss to break even, depending on the strategy and the take profit levels. Next point, recompound my profits or withdraw the profits. I would say withdraw your profits on a weekly base or on a monthly base. But if you are experienced, you can recompound your gains and go with the lot size up, because that basically means that you don't have always a nice week, not always a winning streak, because sometimes you have a bigger losing streak and then you will blow off all your profits what you made before in the weeks before. That's why you should withdraw on a weekly or monthly base your profits. So basically that helps to reduce your risk, so that kind of money what you invested in your account, you can slowly withdraw it, so you are, even when you blow up your account at the end, you are still break even, because you always withdraw some profits and get out your initial investment. So that's why I suggest to you that you always withdraw some profits. Trading journal, yes or no? Trading journal is very useful to track your trading journey. Always back test a strategy before you use real money. Then this point is also very important. Never trade when you are tired, lack of sleep, angry, sad, drunk or sick, because small health or mental issues can affect your decision in your trades and lead into big losses. So that was my important risk management points. You can just follow them and you will see that over time you will be profitable, because sometimes it's not your strategy what sucks, it is your risk management. I hope you enjoyed this video. Hit that like button, subscribe to my channel, and if you want to make this kind of money like on the screen right now, then I highly recommend you should check out my gold signal room. Link under this video. You can join if you want to. If not, also fine, you can join my free Telegram. So guys, I wish you all the best and happy profits. See you in the next video.